Welcome one, welcome all to DeFi Crypto and Airdrops. I am Mike, aka Veteran Crypto, and with me on every Wednesday so far is Jake from Metrix Finance. How's it going, brother?
It's going great. Good to see you
Awesome.
guys.
Yeah, no, it's hopefully David joins us. I know that he had some alpha to share with us all, so we'll jump right into it. Let's go through the socials real quick. I want to make sure that we get to all the places people can go to find all the alpha. So of course, here on DeFi Crypto and Airdrops on YouTube, if you want to join the conversation, by all means, feel free to jump over here and check us out. But a ton of great content. So of course, we got the DeFi Academy. If you're just new to DeFi and want to learn the basics, we got the DeFi Masterclass, which is the episode that we're doing currently. There he is. I'll Let's see. Let's add you to scene real quick.
Hey guys.
I'm just going through the socials. I want to share. You're in Jake's socials and all the great tools that we all offer. Let's see. All right, that's good for a minute. All right, and we got the DeFi Masterclass on Wednesdays and Fridays. We're doing a little bit early today, but it's usually at 2 p.m. Pacific Standard Time. And then on Thursdays, we have Money Talks with my brother Taylor, who's a state lawyer, and Jeff, who is a licensed financial advisor. And we usually talk more about wealth preservation as opposed to wealth generation. So, basically what you can do to help mitigate your tax liabilities, things like that. And then, of course, my boy Jeff, my co-host, he's the airdrop king, and it does all that. We got our Discord. If you want to join that, all the links are in the description of this episode and also on our channel. We have David's DeFi University. This is his YouTube channel he just started. So I would highly suggest you go over there and follow him. He's always dropping huge alpha over there. Also, he has the DeFi University. It's DeFiUniversity.xyz. A lot of great news on here, coaching and tools. And then, of course, in our description of our channel and in the episode, there is a referral code, and you can join, through us. Helps out the channel. Full disclosure, helps out the channel a little bit. Gives us a little bit of money to help grow the channel. And then, of course, you have Jake Call, his YouTube channel, where he's always dropping great content. I personally have been watching him for over a year now. I always, like I said, I'm somewhat new to DeFi and nowhere near the knowledge of these two gentlemen. And so I'm always watching their channels to learn. We can all learn. I learn from the community, from all of you out there. And then, of course, we're always talking about Metrix Finance. Again, we have a link in the description. And this is an amazing tool. If you're curious what it does and how it works, me and Jake did a whole episode on it. And he has some exciting new functionality that's going to be coming out. David assisted with that, with the lending and borrowing. So that's going to be launching here soon. Maybe we can get an update during this show on it. But awesome tool. And there's a 10% discount code on our channel. So I think that's it. I think we hit everything. So, David, how's it going, man?
Oh, dude, I'm doing really great. Thanks for asking, Mike. Jake, you're looking good, man. Your hair looks great.
Thank you. Yeah, I just got my hair done finally yesterday. It's been something I've been putting off for a long time. Yeah, I mean, I appreciate the intro, Mike, as per usual. And I'll give you the quick little 30-second scoop on Metrix Finance. We're aiming for a new launch early October. I'm aiming for first week. Haven't announced anything quite yet. However, we are going to, be announcing that relatively soon. And also, we're going to start floating around a job description pretty soon. So if you're in app or something like that and you're a developer and you want to potentially work on our team, just go on the live chat, say, hey, I'm a developer, would love to work with you guys. We'll keep you in mind once we start floating around that job description because we're looking to expand our team as well. Since one of our guys is going from full-time to part-time, we're going to have a little bit of a lag right there. So want to make sure that we can still continue to provide the best tools. But yeah,
Well, I wish I was a developer, man. I'd love to work with you, but yeah, I don't have those skills.
I don't either, man.
Yeah,
Well,
man.
let's go ahead and jump right into it. Let's see. All right, we got Jesse in the chat. We got Louise. Looks like we're everybody's starting to trickle in. Looks like we got about across all platforms. Looks like we got about 150 people watching live. People are loving the show. I've been kind of keeping track of the analytics, and our last show. I mean, we got a couple thousand people that have watched it so far. So, I'm sure that people are starting to get some really really good information, from you two gentlemen. But let's go ahead and jump right into this. So, this episode, we're going to cover perp dexes. It's a really hot topic right now. If you're not paying attention, it'd be hard not to see it. But you have Avantis, you have Aster, you have Hyperliquid. They're the three major ones that I've been seeing a lot of pumpage on. And as I keep saying, and I have been for quite some time, it really DeFi and RWAs, I feel, is going to be the play this cycle. And not just because I'm a DeFi guy. It's just everything I'm seeing with institutional inflows of liquidity and money and investing and all these different things. Not litigation, legislation in Washington D.C. being drafted with the Genius Act and stablecoins, which is the basis for RWAs and DeFi. All of it points to one place. DeFi and RWAs is going to be the play, and that merge. And David, I'm going to kick it over to you after I say this because I know that you have a foothold in both. But that merge, that retarded fish frog baby of TradFi and DeFi coming together and making that mutant, that we're all, that I know I'm excited about. But David, tell me what you're seeing, and we'll kind of segue into the perps, topic.
Yeah. So if I just take a look around the board, if I'm just looking at markets here, broadly speaking, the first thing that jumps out at me is the fact that you guys remember that global M2 money supply chart,
Mhm.
how everyone and their mom was, overlaying that chart on top of Bitcoin and then saying, hey, well, if you just use a 70-day lag or a 90-day lag or some number of days that lag, that the M2 money supply actually leads Bitcoin and that there's a very tight positive correlation there. Well, that positive correlation broke down, and M2 money supply has reached fresh all-time highs, and yet Bitcoin has not yet been a beneficiary of those flows. Where's the liquidity going? Well, I think it's pretty clear it's going into gold and maybe into a handful of tech stocks. And so what I'm starting to see, and Jake, I'm curious to see hear what you think about this. What I'm starting to see
Hey,
out there.
David, go ahead and throw up your screen. I'll
Oh, sure. Yeah, let me go ahead and share my screen here. I'm just going to share the entire thing, and we'll hop on over here to TradingView. And here's BTC in gold terms. And so this is what I'm trying to get at here. Where's the liquidity flowing? Now, I don't have a copy of that chart that I can just share with everyone here right this moment, but if you bring it up on your own and then you take a look at M2 money supply and overlay BTC on top of it, what you'll see is that M2 money supply has run higher while Bitcoin, that positive correlation has broken down. And so the question is, where is the liquidity flowing? And if you take a look at gold, this is gold futures, this is a daily. Gold has basically just gone parabolic here. So it seems as though the liquidity is flowing into gold. And so what I've done is I've priced Bitcoin in gold terms. And this is a really interesting looking pattern. So notice we're at support, and Bitcoin has bounced just during today's session in gold terms, has bounced above support. So that's a good thing. But, and I'm just going to point out what I see. this is a head and shoulders pattern. And so in order for us to see invalidation of this head and shoulders pattern, and remember, a head and shoulders pattern is typically bearish, but this is just one data point. In order for us to see an invalidation of this head and shoulders pattern, what we would need is for support to hold and for Bitcoin to bounce in gold terms above the top of the right shoulder. That would invalidate the head and shoulders pattern. So, what I'm watching for is for gold to start to consolidate its gains up here, maybe above like $3,600 or something like that. I'm waiting to see gold consolidate up here because I'm starting to see on X, on YouTube, various analysts talking about a similar correlation between gold and Bitcoin that we saw over the last couple of years between the M2 money supply and Bitcoin, where there might be some type of a lag between gold ripping higher and then gold consolidates and then there's a rotation into Bitcoin. Just like we see rotations from Bitcoin into ETH, we've seen this first rotation, and from ETH into Sol. This is part of the second rotation right here. Just like we see rotations under the hood in crypto, there's also potentially a rotation from more traditional assets like gold into crypto. So maybe there is a lag period where gold rips higher, liquidity flows into gold, and then as gold consolidates its gains, maybe we see a rotation into Bitcoin. Curious to hear what you guys think of that. What do you think, Jake, Mike?
Yeah, well, my initial thoughts on that are obviously like I guess the retail side of it, the thing that you really think about is when stocks are hitting all time highs, when traditional assets like gold and silver are hitting all time highs, and those are doing really well. Well, why are they doing it? It's because people have more investable money and they're buying, and the economy is shaping up basically. But then after that, what happens when people start profiting on their less risky assets, their risk averse assets, their less volatile assets? They start taking those profits. At least smart people do, and they start compounding it into riskier assets. That way, the money that they have in these riskier assets, like Bitcoin, like Ethereum and Sol, is almost in a sense house money. They would consider it basically. So that's why there's that lag right there, because there's that lag of them taking money from their what do you call it? Their bank and starting to put it into investable assets, right? And then starting to take money from their assets that are now doing well, their profits, and put that into riskier assets. So I don't have the chart pulled up either right now, but I would imagine that there's less of a lag with M2 money supply growth compared to stocks, gold, silver, traditional assets, S&P 500, stuff like that, than there is compared to Bitcoin. And there's a longer lag with Bitcoin. And then if we were to throw Ethereum on there, it's going to be an even longer lag. If we were to throw altcoins on there, it's an even longer lag, because people go down this rabbit hole, in a sense, I guess you could call it, of basically the least risky assets, gold, then S&P 500, then tech
Trickle down.
stocks, and individual assets, penny stocks, and all
Like
maybe
I'm a
not.
little bit greedy. I'm a little more greedy. I'm a little more
Yeah,
greedy.
yeah. And then Bitcoin, and then Ethereum, and then Solana, and then altcoins, and then
Yeah.
so on and so forth,
Yeah.
basically. So those are my thoughts on it. I think it makes absolute sense, and I think it's cool to see that this is starting to shape out exactly how we spoke about it, David, where kind of this FOMC meeting, while not the day of, was a sell the news event. We didn't see a huge pump in the market. I think we were short term up maybe 1 to 2% on the day, and going down 1 to 2% on the day. And then earlier in the week, basically, we saw a big, nice little dip on Bitcoin, on Ethereum, a nice 8% on a lot of these assets. And that right there was a signal to me. And just like you said, it was time to buy. I was buying because I'm like, okay, well, this is a great opportunity. And matter of fact, I was doing something that I don't normally do using these perp dexes. I was leveraging up. I was taking a lot of money and I was leveraging up simply because I knew that these were good times in the market, and I knew I could do this right now, potentially lose money, but I'm going to regret it if I don't do it, especially since I was considering it and thinking about it. And it always shapes out. I don't do it and then I end up regretting it. So I'm like, hopefully I'm right this time, just like I usually am, but I don't execute. So Big step right there on some perp leverage trades, and we'll speak about that a little bit later on. But yeah.
Well, that's a great segue into the topic of this episode is the perp dexes. We just got done talking about commodities, gold, silver, oil, things like that. We have traditional finance, tokenized stocks that have, Ondo has already started tokenizing the New York Stock Exchange, Tesla, Microsoft, all of those sorts of things. And some of these perp dexes have all of these on one platform, and Avantis, a new perp dex on the base network, is one of them. But before we jump into that, Stan has a really good question for you two gentlemen. And he's asking, can CZ and Aster conquer Hyperliquid? So there's a lot of these perp dexes out there. And to name just a couple, Hyperliquid right now is the largest, if not one of the largest, at about oh no, actually it's in second at 10 billion. Aster has about 30 billion, and then it kind of trickles down from there. And you got MYX that's been pumping, Hyperliquid that has been pumping, Aster that's been pumping, Avantis that's been pumping. Jupiter was moving there for a while. They added perps. So I guess my question to you, gentlemen, and feel free whoever wants to go first, is: are you seeing any one of these perp dexes that you think is going to be the one to rule them all?
Man, so I trade a lot of perps, Mike and Jake. I use perps to hedge my LP portfolio in addition to using my capital structure. So I trade a lot. And what I've found is that for me, I'm almost 100% bankless. I don't use traditional banks for anything if I can avoid it. Um, so what that means is I live my life on the Ethereum mainnet and on Ethereum's layer 2 rollups, specifically Arbitrum and Base. But the vast majority of my stuff is on mainnet. And so one of the most important things for me is that I can track my perpetual futures positions from within my Rabby wallet. I've got to be able to track it and see the positions in Rabby. So for me, Aster, I don't know because I've never used it because there are some big problems with it, for me anyway, that I think we'll get into. But I don't know if on Aster you would be able to see uh, your portfolio positions from within a DeFi wallet like Rabby. I really doubt it. Maybe, but I kind of doubt it. Um, and then when it comes to Hyperliquid, the challenge for me with Hyperliquid is that
David, really quick, could you just very briefly explain to people what exactly a perp is?
Sure. So there's a perpetual futures contract, and then there are traditional futures contracts. So traditional futures contracts have an expiration date, and on expiration, they roll to the next front month. And typically, you're trading the front month futures contract. And so that's where you get into this curve, this futures curve, where it can be either in contango or in backwardation. And contango and backwardation refer to the direction of the futures curve, either moving to the downside in backwardation or moving to the upside in contango. So the futures curve is what you have to think about when you're trading traditional futures, like you might trade on the CME if you're trading Bitcoin or ETH or something like that, or maybe the S&P. That's the one of the most liquid futures contracts. So those are traditional futures. Perpetual futures don't expire. There's no roll. And so instead of tracking the futures curve in contango or backwardation, I track funding rates. And funding rates are a way of you know making sure that market A on Hyperliquid stays pegged to a spot price and not so far away from market B on GMX, let's say. The funding rates make sure that there's always an arbitrage to keep prices pegged pretty well. So when I'm trading perpetual futures, I'm always looking at those funding rates. And sometimes those funding rates can be really, really positive. Um, well, so it depends on whether you want to get long or get short. So if you're looking to, be levered long on a perp dex and you don't want to pay to keep the position open, then you should be looking for negative funding rates. If you want to be levered short on a perp dex and maybe you want to earn some yield, while you're levered short, you should be looking for positive funding rates. And so for me, I really like using GMX just because I'm very comfortable using it. It may not be the fastest or the cheapest, it may not have the very best spreads, but trust and comfort is important to me. And that's why I use GMX. But I earn a lot of funding yield on my short ETH perpetual futures positions on GMX too. Right now it's paying something like 15 or 16%, but there are periods when it's been as high as 30, 40, 50%. So that's where you can get into that positive carry, right? If you're trading perpetual futures against some underlying spot position and you're earning yield, you're earning that funding rate on the futures position, and maybe you're earning some yield on the spot position, you can get carry on both sides of the trade. So I kind of went off on a tangent there, but
Very, very thorough.
yeah,
Very thorough. So no, and that's great. I mean, that's what we're here for, is to explain the nuances of what each of these things are, so that people have a better more rounded understanding of what we're talking about. And how a perps dex. What's the difference between a perps dex and a regular dex? So
Mhm.
uh, real quick, so Avantis is the one that I've been messing with, and I'm kind of farming the airdrop, the season 3, by using it. But you can see that you have zero fee perps, you have equities, and equities are these tokenized stocks. So you have Tesla, you have Nvidia, you have Coin, which is Coinbase's stock. You have Amazon, Apple, Meta, which is Facebook. You have Google, Microsoft. So you have traditional tokenized or traditional stocks that have been tokenized by Ondo. You have indices, so the SPY, the QQQ. You have, of course, crypto. You have Forex, which is a foreign exchange, so basically trading fiat currencies. And then you have commodities. So you have gold, silver, and David, what is WTI? Is that oil?
West Texas Intermediate Crude.
Okay, so oil. All right. So yeah, I mean, there's a little bit of everything on this platform, and I've been reading up on it, and they're actually going to be launching DeFi. So there's going to be some DeFi plays. Currently, the DeFi play that they have is basically a place where you can deposit your USDC to earn yield. So you can earn 5.73% on this junior vault and 5.19 on the senior vault. They're doing some tweaks right now. I just withdrew mine, but you can soft lock. And by soft lock, I mean you can withdraw your liquidity at any time for a fee, but you can soft lock for up to 6 months and earn over 20% APR simply by depositing your liquidity. No looping, doing anything crazy. You don't need to lever up your risk or risk getting liquidated or anything. And Avantis, something I love about it, it's non-custodial. So, Jake, what have you learned so far as far as these perp dexes, and what you are noticing, and maybe some that you are using and how you're using them?
Yeah, so I'm currently using Hyperliquid right now. I'll show some of my shorts and just, or not my shorts, my longs in just a second. But ultimately, like the thing that I like to keep in mind is like I think all of these have a use case. As David mentioned, some of them are going to have better funding rates than others. What I would like to see in the future would simply be an aggregator. And I don't just mean like, oh, here's what the funding rates look like across all the perp dexes, because there are tools like that. What I mean is like I would like to log into a perp dex that's not actually a perp dex, and essentially it's powered by Hyperliquid, Avantis, GMX, all these Jupiter, all these different ones, and then
Metrix
ultimately
Finance.
Yeah, imagine. Um, Might be a little outside of our scope for now, but ultimately, what it would do is whenever you want to go and place a long, it would go and it would place your long across the best exchange at that moment in time. Bonus points if it can go and place it across multiple exchanges at that moment in time to make sure that you pay or receive the best funding rate possible. And then from the front end for the user, it is just simply one trade, right? And your profit loss is shown, and it looks as if you're trading on one single platform. But reality is, in the back end, it's happening on all these other platforms, just like Jupiter, just like Matcha do whenever you go and execute a swap, right? You're not having to go to each individual DEX and be like, okay, Matcha's telling me swap 10% here for USDC, then swap 15% here for USDT, and so on and so forth. Matcha just does it for you, right? But all of that is happening on the back end. It's all connected on the back end. That's what I'd like to see for perp dexes, and whoever makes that product right there is going to make a lot of money, I would say. So yeah.
Awesome.
So,
Well,
so
oh,
Jake, I think
go ahead.
that's part of the reason why, Aster may not be as successful as Hyperliquid,
Hmm.
because Aster really isn't decentralized in the
Yeah.
ways that matter. It's basically like Binance's little pet exchange.
Yeah.
Like it's basically just a centralized exchange where it's kind of masquerading as a DEX, as a
Yeah.
perp DEX, right?
Yeah.
Um, so yeah, I would much prefer a decentralized exchange to a centralized exchange.
Yeah.
David, have you or Jake? I heard somebody talking about it this morning on some of the morning shows in the chat. There was what they were saying was some shady, not activity, but distribution of the Aster token across some wallets.
Dude,
Have
totally
you,
shady. Totally shady. It's
so
like
so you
90.
so you so you've seen this?
Yeah. It's like 96% of the supply is held by like a handful of
Mhm.
team wallets. So like compare that to like the worst meme coins out there. That's really, really bad.
Yeah.
It's kind of like, Asters and CZ and Binance, they're just saying, trust me, bro, we're not going to sell. It's all
Yeah,
good.
Yeah.
Like,
yeah.
do you want to trust that? I don't know, man.
I don't.
I
But
don't.
I haven't really heard anything. I haven't, really, Mike. I've seen these pop up, right, especially over the past like couple weeks, but I haven't really dove into the weeds of them just because I've still been using Hyperliquid, And when I think about where I want to go park money, because do keep in mind we are parking money on these platforms, like we're trusting them with our capital. Like when I
Yeah.
think where I want to park money, I want to park money with what's going to ultimately give me the lowest risk possible, especially if I'm executing a trade. The reason why is because if I'm executing right now, I'm doing 5x leverage on Bitcoin. I opened at 112,000. If I'm executing 5x leverage on Bitcoin, my goal isn't to get the best funding rate. My goal is to get ultimately the all the upside from Bitcoin on 5x leverage. And if I have the difference between say 20% per year funding rate that I'm paying compared to a 10% one that I'm paying, I would much rather go with the 20% one if it means that there's a lower likelihood of me waking up tomorrow in my trade not even being there, right? In my position not even being there. So that's the
Mhm.
thing when it comes to me, at least. And again, there is going to be an exception when it comes to super high discrepancies between funding rates. Like if the difference is like paying 20% versus earning 10%, well, maybe I ought to do an allocation across both of them, basically. So that's just something to keep in mind. But yeah.
Well,
Yeah.
real quick before we keep going, because I don't want to forget, there is a little bit of news that I wanted to put out. Kita, KTA, their mainnet went live yesterday, and so they are officially, everything's firing on all cylinders. It looks like they're starting to announce partnerships that they've had. One of them is Agora, which is a stable coin. So basically, they are partnered with both Plume and Kita, two projects that we're very bullish on, on our channel in our community. But Kita launched KUSD, and then Plume, they've officially entered a incubation program with Mastercard, and this
Oh no.
this one
No.
I just
Okay.
thought was funny of the all the presidents, and you can see here's Donald Trump's first first term in office, and then where Biden is supposed to be is an auto pin, and
Yeah.
then again. So I thought that was hilarious.
Oh
So
my
anyway,
God. That is
just
that
wanted
is
to
pretty funny.
yeah, I just wanted to share that real quick. But so I mean, you've both voiced some concerns potentially with Aster. Hyperliquid, I think, looks to be pretty good. Both Aster and Hyperliquid seem like that they're pretty hot. They've already had quite a bit of pumping, and as far as market cap, they're pretty high up on the list. Out of the three that I'm watching, I keep my attention keeps going back to Avantis. Um, and of course, I'm biased because I like base, but it's like it's over 100 as far as market cap, as far as ranking. So it seems like there's still a lot more room to move. And I really like the tokenomics and kind of what it has going on and how it's building out. And then not to mention, of course, the the potentially how it could end up being part of the Coinbase platform itself and the Coinbase app, once it's fully launched. So, in your gentleman's, you know, uh, kind of opinion, uh, how do you see this whole perp dex narrative playing out? Again, kind of which one do you think is going to kind of again be that one to rule them all?
So Jake, Mike, I don't know that there is going to be one to rule them all.
Hmm.
But here's the way that I think about these different perp dexes, something that's really important for me. Um, we're going to see much more regulatory clarity in the United States and globally in the coming months. And will Hyperliquid enforce KYC AML regulations and start to report on its users so that governments can steal from them? Are we going to start to see that? I don't know, but probably. So I kind of like the Wild West of DeFi. I like not having to worry about, someone breathing down my neck. I like, the onus of reporting is on me. So that's important for me. And you know, I don't know what regulation is going to do to these products, but I'd be willing to bet that a lot of these large perp dexes are going to rush to comply with any type of regulation, no matter what it is. So Avantis, backed by Pantera and Galaxy Digital, they are definitely going to enforce KYC AML at some point. I would think so. Hyperliquid, probably the same thing.
Hmm.
Um, GMX, I don't know. Is GMX offshore? Are they in like the Bahamas or something?
Let me take a look.
Maybe.
I'm
But
not entirely sure, but I do agree with you, David. Like, I think a lot of these, the true rulings will show like what's centralized versus what's not, and the ones that are centralized on the back end will require KYC. I mean, for example, we've already seen this with Uniswap V4 hooks, like specific like liquidity pools requiring KYC for you to enter. And again, like anybody can create same fee tier or even a lower fee tier with Uniswap V4 and make it so you don't need KYC, but it's like there might be advantages to using that hook, like auto rebalancing, like auto hedging, and people have complete control with what they want to do on those hooks when creating them. So I think the regulatory landscape just moves more towards, I guess, decentralized products shining. And if the U.S. does make a law like that, that's a step backwards. I think there should be a maybe just thinking outside the box here for the US, like maybe a benefit for the exchanges KYCing potentially, right? But not a requirement for them to KYC, right? Because I wouldn't mind KYCing if there was some extra benefit, or something like that, maybe more trust, maybe, I don't know, you know what I mean?
Yeah.
But in the essence of, yeah, I mean, a decentralized exchange, it should be accessible still.
Well,
It
let's
should still be live in a product. So
Hmm.
let's circle back a little bit because David brought up a really valid point, and it's something that Stan mentioned in the chat. Will regulations limit Avantis offerings compared to Hyperliquid and Aster? Let's dig in a little bit on regulations, because it really is going to have an effect on which of these platforms thrive and which ones wither and die. So let's stick with Aster, Hyperliquid, GMX, and Avantis. Out of those, just really quick, rapid fire, kind of which ones do you think are going to get hit hardest by regulations? Just because of how they're structured. Like, I just tried to look up GMX and where they're headquartered, and basically there is none because it's so decentralized that the entire team is just spread all over. There is no entity, and so it's truly decentralized. Whereas some of these other ones, they actually are headquartered in places and are going to be more I think going to be more able to get in line with regulations. So David or Jake, actually, you go first. I mean, what are your concerns as far as regulation, and which ones do you think are going to be able to be more nimble and align themselves with KYC and AML and all that stuff?
yeah, so like I guess the first thing that we need to establish is regulations can be good and they can be bad, right?
Mm.
And the second thing that we need to establish is like with regulations, if regulations slap on, say, DeFi tomorrow, if they come up with a whole playbook and launch it for DeFi tomorrow, it doesn't mean that our money's stuck, right? It doesn't mean that all of a sudden, right, we can't access DeFi. We'll just flick on a VPN.
All that to people in Thailand, bro. You know what I
Right.
mean? Like,
Yeah.
did you see what happened in Thailand? Like 80 million accounts frozen overnight because people didn't immediately comply with a digital ID.
It's
So
not.
like,
No.
I'm not saying that that would happen,
But
right?
would those be centralized accounts, David?
Yes, yes, of course they are. But
Yeah, yeah.
uh, yeah, so Jake, I think that regulation is going to drive legal innovation. I
Yep.
think a protocol like Avantis is going to have, and Hyperliquid. Oh, it was Vietnam, Peter. Yeah, not Thailand, Vietnam. Not quite sure, but one of those Southeast Asian countries. But I think that this regulation, Jake and Mike, is going to drive innovation. I think that protocols like Avantis and Hyperliquid that are likely to be compliant with all regulations when when they're finalized. I think that we're going to see offerings on Avantis and on Hyperliquid that you're not going to be able to get on other perp dexes like
Correct.
GMX. So
Yeah.
there are pros and there are cons. It's just like, for me, the whole idea of having to show an ID and pass KYC AML is anathema to
Yeah.
everything that crypto stands for, and it's repulsive to me. So
Yeah.
like, if I can avoid that, I will avoid that. And if it
And
means that I can't trade WTI on Avantis, well, so be it.
yeah. And what I was gonna say regarding that is like it's not like we're going to fly in a plane. Like, we're literally like sitting in our office, our room, our house, apartment, whatever, wherever we're at, right? And we're opening up a platform and executing a trade with our own money that we know we can lose, right? So it's very, very clear about the risk. And I think like the only thing in DeFi and crypto, in my opinion, that should be regulated are number one, the things that touch traditional assets, including the US dollar. So that includes stablecoin companies, right? That does not include stablecoin companies that are backed by other stablecoins. That is Circle, that is Tether. They have US dollars in the bank, right? They need to be regulated to ensure that there is money backing that and they're not trying to do anything fishy with that. But on top of that, getting money on and off, that way there's a prevention of people just simply doing illegal things, right? It can eventually be tracked back to somebody. However, the fact that, or not the fact, but the idea of regulating DeFi and regulating what happens within DeFi is just so utterly absurd to even think that it would be a possibility, because we've seen this before when the US was not crypto friendly with the last administration. Everything was blocked in the US, or not everything, but most of the things. And you just flick on a VPN, you go to Mexico, whatever, and all of a sudden you can access it. Yeah, you know what I mean? Like it's like it is super easy to still do that, And I don't know. I think maybe if the U.S. wants to regulate things, it should be regulating risk disclaimers and regulating what is being promised. Like, for example, having kind of like what we see with the FTC with
Well, like
anything.
reserves, having some sort of reserves or insurance, or where people's liquidity is protected, like FTX, where they're sitting there freaking buying jets and throwing parties with the people's money on the platform and donating to political parties.
Yeah.
That's the regulation I want to see, is
Is
protect my
centralized
assets.
exchanges. Yeah, with centralized exchanges, of course. But like with decentralized exchanges, it's all verifiable on the blockchain. So I guess the real question is like it shouldn't be a question of if what do you call it, the government should regulate it. It should be up to third party companies to create monitoring services for specific platforms, or you to go learn how to do your own research and learn how to check reserves and learn how to not audit
Imagine
smart
that, be
contracts,
an
but
adult.
yeah, I mean, what typically comes with being an investor.
Yeah,
Otherwise, you should just hold your assets in your wallet if you're not willing to do that, because there's risk associated with this. And don't complain, don't bitch about losing money if you weren't aware of the risk because you didn't take the time to do your research. And that's the
yeah.
only reason why they would want to regulate things, because people lose money, or also because they don't want people having access to opportunities. But if that happens, it's very clear what they're trying to do.
I
So
think it's about theft. I think that
Yeah.
governments want to steal from people through
Mhm.
yeah,
taxation, and
yeah,
I think
Yeah.
that the way that they can do that is by enforcing KYC AML, and
mm,
the whole purpose of Bitcoin and DeFi and crypto is for
to
it to be a
from that
parallel.
traditional system.
Yeah, for it to be a parallel system that is better. And if, DeFi is subsumed by TradFi, and regulation ends up, you know, probably fostering innovation. But man, if that regulation, like, think about it this way, what if what if JD Vance doesn't win in 2028 and
Mhm.
we've got some communist running the United States? Well, all of a sudden, all the stuff that we've been living on, they might just roll all of that back. So, another administration that isn't quite as crypto friendly could really really destroy
Mm.
this innovation here. So, yeah, that's something that I think about a little bit. Hopefully, we never see that,
Yeah.
but I don't know. I don't know,
Yeah.
man. I'd rather be where there's no KYC AML.
Yeah. I think by being a resident of any country, you should be required to pay a tax because you're benefiting from the services, right? Public roads, public service when you go and you get your ID protection, right? Law enforcement and everything, but it shouldn't be the levels that it's currently at, not at all. And
I think that's
What law enforcement? What are you talking about? Like, law
well,
enforcement? You live in Texas, Jake. So, like,
I,
yeah, there's law enforcement in Texas.
yeah,
You,
you're in California.
I'm in the People's Republic of California, man. Like, dude,
And they charge you extra to live there to enforce
yeah.
yourself. And by the way,
it's
because you have to
like,
pay to the state.
Well, I
But
think I think
yeah,
that's kind of the disconnect, is that it's, I think everybody understands that to an extent there does need to be some sort of taxes, but it's just to what extent?
no, there doesn't.
It's
There
like,
doesn't need to
you
be.
go to work to
Uh-uh.
earn money. Your employer pays a bunch of taxes, just to operate and to employ you. You pay taxes on your income. Everything you buy, there's taxes on. At the gas pump, there's additional taxes. You go to license your vehicle, there's licensing fees. If you decide that you want the luxury of owning a property in a house, you have to pay property taxes for
Yeah,
the
you're basically renting it from the
yeah,
state
you're
because
Yeah,
basically
yeah,
because
yeah.
don't pay your property taxes and see what happens to your house that you have paid off.
regardless of how much equity you have in it. If you owe
Exactly.
$3,000 in back property taxes, but you've got $1 million in equity in the house, it
Yeah,
doesn't matter. They're going to
yeah,
steal it from you.
Yeah,
yeah.
and
Like
and that's where the
taxation
line
is
needs to
theft.
be drawn, there's it's essentially dipping into your money 10 times over. When you go to buy
Exactly.
something, you have sales tax, but also when you earn money, you have income tax, right?
Yeah.
And then on top of that, property tax, as you mentioned, David. So
It's
it's like
like how many times are you gonna be taxed on the same freaking dollar?
there's just
And to top
too
it all
much.
off, it's printed. It's
Yeah,
credit. It's
It's
debt. It's
magic
not
money.
real. They print this stuff. It's Bitcoin is money.
yeah,
Fiat is credit.
Yeah.
And the taxation where you're working 6 months out of the year for
To pay
free.
taxes.
What the fuck is that?
yeah,
Yeah.
Excuse my French. But that's why when I watch these guys on X and YouTube in Dubai and countries like that, of which there are very few, by the way, and they're talking about, why are you paying 50? What do you get for it? What do you
Yeah.
get for those taxes? And what I would submit to you guys is that we
Shitty
don't get
schools, shitty
much.
roads, bridges that are falling apart, a
yeah.
corrupt government, freaking that's encroaching on our freaking, liberties and freedoms. I won't go down that road. I'll rant forever. But you were
Yeah.
saying, Dave.
Yeah,
Like
and then you got to hear people talking about, oh, just pay your fair share.
a fair
Man,
share.
like what?
Well,
Excuse me? Like, have you ever built anything in your life? Like
yeah,
fair share? Like, yeah,
It's usually the people that aren't paying anything or much that are are taking from the system and not contributing are the ones that talk
well,
about fair share.
they're in the 10% tax bracket,
Yeah.
and as you make more money, you number one have more stress as an individual. You number two have more problems. You have more people trying to hunt you down. You have more people trying to steal from you, right?
Mhm.
You have more headaches when you make more money, right? And then it's pay your fair share, and then all of a sudden you're back at this point where you started. You grow and you build, and then you get set back. It's like you just keep getting knocked down, and especially when you're at a point like I firmly believe that there's a level between companies that are say doing $50 million a year that can somewhat spend the money to mitigate their taxes and come up with these advanced strategies, and then also the people that are basically under that level that are at that sweet spot where it's like you're just forced to pay or move out of the United States or move
Hey,
to Puerto
you need
Rico
to
or
you need to
something
go
like
talk to Taylor, my
that.
brother. I'd be willing to bet that he can help you out quite a bit, and he's right down the street from
Yeah,
you.
I was gonna say he's in Texas, right?
Dude, I'm telling you, he's a freaking genius when it comes to mitigating taxes and making sure that you're insulated and
Yeah,
from a legal standpoint.
yeah,
So I've been looking into this quite a bit recently. I'm thinking about buying a piece of property, and I want to be able to mitigate my tax burden. And
Mm.
what I've been looking at is in Texas buying either a laundromat or a car wash or a gas station. And the
Storage
purpose,
units are good too.
oh, storage units. Yeah, I didn't even think of those. But maybe a
Low
storage unit.
overhead. Once you have them, I mean, there's almost no overhead. It's just basically mailbox money.
Well, so that's not really the purpose. The purpose is to draw forward depreciation and
yep.
use a study to pull forward
Cost study.
depreciation. Exactly. So that's the whole purpose.
Yep.
And if at the same time you can generate some passive income, for through the laundromat or the gas station or the whatever, that's a bonus. Great.
Yeah.
But that's pretty interesting. And I've started to read the tax code a little bit, and in the United States, and it's like, okay, well, property ownership is heavily incentivized.
Mhm.
So I'm going to do what the tax code incentivizes me to do so that I
You know,
can remain a legal tax-paying citizen and rant and rave about taxes all I want.
you know,
So
I probably shouldn't share this because everybody's going to, rush and do it. But my family's from Puerto Rico, and if you live in Puerto Rico for over 6 months of the year, you don't pay federal taxes. And
right.
so I'm actually looking at getting myself a place down there to live for just over 6 months out of the year
You
to
know,
mitigate my taxes. And it's a U.S. territory, so there's no customs. You don't need a passport. You don't
yep.
need any of that stuff.
You
Can,
know,
can I give you guys I'm sorry, Jake. I want to just interject
no,
about
go
Puerto
ahead, go
Rico
ahead.
real quick. There was a guy when I was interviewing him to work with me as a private client, and he was calling in on the video call from Puerto Rico, from
Mhm.
San Juan, the capital city. And in the middle of our conversation, all of a sudden I hear blah 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 like this. It's like there's gunfire outside of his
Hell
window.
yeah,
And it's like, and
that's my
he
jam right
he just looks over. He's like, "Oh yeah, it's a automatic rifle fire outside the window." I was like, "What?" So
Well,
yeah,
you
man,
know,
that's
David,
my
I'm
yeah.
one of the things I was going to say regarding that of Puerto Rico is like it's a really really good idea, but what I've been told by people that have done it is if you're young, don't do it. And I'm so young, it's like that's what I'm stuck with. I'm basically paying like however much money to stay in the U.S.
there.
Just because I have my family here, I have my life here, I enjoy it here,
How
I
much
enjoy
is
the
that
area.
though, Jake? Hundreds of thousands of dollars a
Hundreds of
year?
thousands of dollars a
Like,
year, yeah.
bro, make that make sense, man.
Exactly.
Like,
Yeah.
how
Well,
does that
I
make any
I mean,
sense?
for a lot less than that, you could buy a place in Puerto Rico, and like I said, just as long as you reside there, more than 6 months out of the year, you've mitigated your taxes.
Mhm.
You can have your place in Texas, and bounce back and forth. I mean, hell, it's like get you a small plane and you can fly there yourself.
Yeah, that's the thing, I
You
feel like once you're at, like, it's a certain level, it's like, it's worth it to do that. I
Yeah.
just feel like I'm not at that level quite yet, and I
Okay.
don't wanna make a
Yeah.
rash decision based on current statistics, and then all of a sudden, maybe income is down in 6 months or something, or business isn't doing as well, or I'm reinvesting more into the business, so now all of a sudden my net is a lot lower, and then be in Puerto Rico and be like, "Well, shit." You know? That's the main thing. But I'm with you on that cost seg, David. And one thing I would say is buy an ice cream truck, man,
An
because
ice
that way
cream
you don't have
truck?
property taxes. And
Oh,
the other thing is if you can classify yourself or a spouse as a real estate professional, then you can cost seg on what do you call it? Ordinary properties, long-term properties, because the problem is that income as well as any expenses associated with that can only offset passive income if it's a long-term real estate investment property. However, if you have something that's short-term, Airbnb, which is pretty classic but also pretty volatile, then you're ultimately going to fall face to not like all the risk associated with that, but you can offset your current income. So I've been looking into ways because I've always wanted to get into commercial real estate, and just do it on a bigger scale, basically. Um, I've been looking into ways that you can have a commercial real estate property and cost seg
Jake,
that. So
definitely talk to Taylor and Jeff there by you.
put me in
They
touch.
are they well they are telling me. Well, just look up the Willingham Law Firm.
Okay.
Um, they have for quite some time now. They've been saying stay away from commercial real estate. There's a huge
Oh,
bubble
okay.
right now, and they've talked extensively on it on the show here. Where especially with interest rates the way that they are, a lot of banks a lot of their investments are in commercial real estate,
Hmm.
and they're coming up on that. I think it's 5 year where they have to refinance, and with
Hmm.
where interest rates are, they potentially are going to become insolvent, because of not being able to refinance,
Yeah.
at the super low rates that they had before, and it's going to cause a cascade effect potentially. So yeah, I mean you might want to go talk to them about that before you get into any commercial real estate.
but
Good to
that
know.
creates opportunity though, Mike.
Yep.
When you got
After the fact, not before. You wait for the crash, and then
Yep.
yes. Yes.
Yeah, you know who I really like when it comes to real estate on YouTube is Ben Mala. That's his name,
And
right?
Mala, yeah,
Yeah, the big guy from from New
just
York or something. Or no, he's from isn't he? He came up in Compton, like that's where he started to make his money, right? And then I think he moved to Oakland. He was living in the hills, and now he's in Florida.
yeah.
But yeah, no, I really like his content, and he's been talking quite a bit over the last couple of months about the commercial real estate implosion and what he's looking to do.
Interesting. Well, yeah, I don't keep up with it. That's the problem,
It-
and that's why I
it's
haven't done
just
it
it's
today.
so entertaining.
You
Yeah,
know,
he's
yeah,
he's very entertaining.
yeah.
Here, let's see. Where are we at here? There we go. Ben Mala.
And Mala, I
Yeah,
always see.
there he is.
He's hilarious, and he's also
Yeah,
informative. He's and
yeah,
that's the thing about us. We have to be entertainers and also informers.
Hmm.
Otherwise we don't get anywhere. That's the
Yeah.
problem.
So, so yeah, no, that's. I mean, I would highly suggest Jake. Like I said, go down and just sit down. Go out to lunch with them or
Yeah,
something like that. I mean,
yeah,
I can set it up, but yeah, I mean, you can just pop down the street. It's super approachable. Super cool guys. But you might want to get their input on commercial real estate and when to actually pull the trigger on something like that
yeah.
because you know they're they're pretty damn accurate in like the advice that they've given me in real estate and traditional finance and stuff like that.
Mhm.
They're usually pretty spot on with their calls.
Good
So
to know.
anyway, there's
Yeah,
that.
yeah. I appreciate that.
Well, it looks like we're starting to get towards the hour, and I know that Jake, I know that you had to go. So do you want to give your closing thoughts?
Yeah, I'd love to share kind of like what I'm just doing right now on Hyperliquid. Again, as I said, like I wanted to do something this time around once we saw that nice little dip, something that I'm not gonna regret that I didn't do later on, basically. So I just went all in full force, basically. And actually, I have some alpha to share regarding concentrated liquidity too.
Absolutely.
But I opened up a Sol position, Hype position, Ondo, BNB, EtherFi, Agen, ENA, Syrup, and I opened all these with leverage. You can see the leverage right over here. And then what I also did is I took $30,000 and I just put it on Bitcoin with 5x leverage. And to the funding rate, this has been open for 2 days. We've paid $80 in funding rate. So again, it's pretty high. But I've also made $1,500 in overall profit just from that long. Which has done pretty well as well. My liquidation price is 91,000. I don't think Bitcoin's going back down to 91,000 anytime soon. I think if so, it's going to go to 150,000 first. That's also my target here. At 150,000 per Bitcoin, I'll have roughly a $50,000 profit on this, over 100% basically return on investment because I'm using 5x leverage on this. And I went in with 30,000. So that's kind of like my final leg of the bull run type of play basically, and just like wait for that to perform. And I do think Bitcoin can go above 150, but that's where I would start removing leverage and start being more cautious and taking
Mhm.
some profits. And then just regarding what I'm doing over here with ETH and concentrated liquidity, I'm running a cool little strategy. So basically, I had this position. It was Ethereum paired with Serve. If you guys don't know what Serve is, you're not missing out on anything. Serve is basically like a AI platform that I'm going to pull it up. Helps accelerate revenue basically and build agentic apps. So you can think about it like virtuals, but in my opinion, probably a little bit better. Has revenue, has better tokenomics in my opinion. The thing is, people just aren't using the product yet. A lot of these agents are built strictly by them. And I think over time, this gets traction because there's a lot of different things you might want to use this for, especially when it comes to building. It just didn't have that traction yet. So naturally, Serve is pretty volatile. And what ended up happening is I'm just waiting for it to pull up on my other screen. In the meantime, we'll show Serve. Serve went down a ton, right? If we look at, say, the past month or so, it's down 42% in the past month. Now, I opened this position right over here, this Ethereum Open Serve. Man, I need to buy a new MacBook. This thing's lagging. I opened this thing on September 4th. So roughly over here at a price of basically 7 cents. And then at my time of exit, 22nd, we were basically at 3.9 cents, I think was the exit price. Yeah. So nearly down 50%, down like 40% basically or so. So I'm like, okay, well, what do we do here? Because this liquidity position over here is down 35%. It's got a loss of $1,000 compared to Hodl in the market. And yeah, I was doing 120% APR, but I was so far out of range that I wasn't earning anything. So do I swap and rebalance and ultimately lock in a bunch of that divergence loss? And then when I'm at my initial entry price, have like $1.50 grand less than what I started with? No, that doesn't make sense. B, do I just exit this position, take the losses? I mean, I could. C, do I what do you call it? Add capital? Well, I wasn't really confident in adding capital after this, right? Especially when I saw how fast it moved. So what I did instead is I took all the serve I exited with, or at least the majority of it. I think I left like $750 in serve. I took the majority of it, which was basically 5K, let's just say, because I earnings plus the 400 here. 5K. I take 5K and I convert it all to ETH because ETH has to go back to a price of 4,300. That's my initial entry price. And serve would have to go back to 7 cents. Now, in my opinion, there's a higher probability that ETH will go to 4,300 than there is that serve will go back to 7 cents. Now, do I think serve will go back to 7 cents? Yeah, I think it'll go past that. But there's a higher probability that ETH goes to 4,300, a plus 7% move or so, than serve going nearly 2x basically. So knowing that in my mind, I take the ETH that I now swap, so 5K worth roughly, and I leverage it up. 2x leverage over here on Hyperliquid, right? So that way, when I'm at a price of, let's just say, 43.05, which was my initial entry price, I am at actually a profit here because I have 2.29 ETH of exposure times, actually, let's just assume 2x leverage. And my margin, man, still getting familiar with Hyperliquid, but let's look at the trade history. My margin over here being, where's that ETH? Okay, right here at 41.51. David, do you know where I can see my margin that I started with?
Your initial margin over on
Yeah,
Hyperliquid, I really can't see your screen very well, and I don't trade very much on Hyperliquid. I trade on GMX.
you're good. So let's see. I think I can see it over here. Anyways, my point is like by using just 2x leverage, something that's safe because I don't think Ethereum is going to $2,100 anytime soon, right? Using that 2x leverage and just waiting for it to go to 4,300, I now recoup my entire 8.8K that I started with plus some, right? Because I have leverage on it basically. And in my opinion, it's safe because there's a higher probability that ETH goes to 4,300 over serve going to 7 cents and going nearly 2x basically from current price. So that's my contingency strategy here. Now during that time, it's not earning anything. Do keep that in mind. It's paying a funding rate to do this, but it's worth the cost to keep it up basically. So yeah.
So, Mike, Jake, you know what I love about DeFi and just about markets broadly speaking is that there's no one right way to do this stuff.
Yeah.
Yeah.
It really comes down to you and what you're looking to achieve and how much risk you're willing to take. And so I know that we're probably out of time, but I would like to, Mike, if you'll allow me, share my screen
Yeah.
and walk through because I live banklessly on Ethereum, and I live off of my LP portfolio.
Yeah.
And
Pop your
so
screen up.
I just want to share with you guys what that looks like for me. And before I do, so I actually have a difference of opinion with Jake here about positions. I think that Ben Cowan is right. I think that Ben Cowan has the ability to read the Bitcoin halving cycle pattern better than anyone else. And if he's right, well, then I think that we would probably have another couple of weeks into October of potentially some downside for Bitcoin and digital assets. So for me, even though I am long and even though I am levered long ETH, I do expect more downside over the next couple of weeks. So that's my expectation here. And also, remember seasonally, the end of September and October is the most volatile period for the S&P. And so, the end of October, it's September 24th, the end of September here, and we're starting to see the S&P maybe get like a little baby dip. But think about this. If there is a small dip, even 3 or 5% out of the S&P, what could that mean for Bitcoin and for alts? I'll leave you to answer that on your own. But let me just go ahead and bring it back over to
You
my
dirty
portfolio.
tease.
I think that if the S&P goes down, the Bitcoin would go down too. But I think it's the final buyable dip before we get true euphoria in alt season. I think that we're weeks away from a true alt season. How am
Mhm.
I playing it? Well, I always think about portfolio ETH deltas, and I am long, I'm levered long ETH. So if I supply 74 ETH and I borrow 47 ETH against it, I am plus 27. So I have 27 positive ETH deltas over here on Aave. So I'm net long. But because I borrowed 47 ETH here, this is a source of negative ETH deltas. And so these borrowed ETH, these negative ETH deltas, effectively hedge my LPs. So these two LPs, which are both on Uniswap. I only provide liquidity on Uniswap, and I'm on mainnet here, and I'm on Base. The performance of these two LPs have been comparable over the last 60 days or so. The mainnet position has outperformed, but what I want to share here is, not so much just the fee APR or the ranges. The ranges here are plus or minus 5% wide. What I want to share instead is how I'm borrowing against these LPs to reduce my exposure to the revert protocol and to be able to get to an ROI more quickly. So, what I've done here, you see this borrow button, you guys? When I borrow against an LP on revert, I never use the leverage function. I only use the borrow function. Now, the reason why I don't use the leverage function
And
is
real quick, David, is this looping?
so I didn't loop this. I borrowed, and then I took what I borrowed and I threw it onto Aave and bought more ETH with it.
Okay.
So I guess you could kind of say that that is looping. I guess, kind of, sort of.
Hmm.
But there's an important distinction between the borrow function on revert and the leverage function. If I borrow against an LP, then this USDC that I borrow is deposited into my wallet. And when it's deposited into my wallet, I can go and do something else with it in DeFi. And
You're not locked on to the reverse platform. You can basically, like you said, take it to anywhere or cash it out and spend it. You can do whatever.
correct. Yeah. So what I do with what I borrow is I'll throw it on Aave or I'll do something with it, and my goal would be to earn more than what I'm paying to borrow this USDC. But if I were to use the leverage function here, then I would borrow, but those borrowed assets would immediately be swapped for further pool assets in order to increase the notional value of your position. What is the problem with that? The problem with that is you're levering up by borrowing USDC and you're multiplying your position deltas. So remember, people like to talk about CLPs when you set a range. That range can be a form of leverage, kind of, sorta. And what I think people mean by that is you can create greater deltas in an LP with the same amount of notional than if you were just holding spot. So if I have, $60,000 of ETH, $60,000 of ETH would be, well, what, like something like 15 ETH. But if I have $60,000 in an LP and I have a plus or minus 5% wide range, my ETH deltas in the LP while it's in range will be significantly greater than just holding that ETH spot. So if I've got 15 ETH, then I've got 15 ETH deltas, positive ETH deltas. If I've got the same notional amount of capital, but it's in a CLP with a relatively narrow range, then I may have something like 200 ETH deltas in that LP. And all that means is that for every $1 that ETH moves, the value of my LP moves by $200 if I've got 200 ETH deltas. Now, these CLPs are nonlinear, so your deltas are constantly moving depending on whether you're in range and where price is within your range. So if I know that providing liquidity can be a form of leverage, and if I borrow stables against my LP and use that to increase the size of my position, then you're multiplying your deltas and you're using a lot of leverage to do it. So I don't use the leverage function ever. I will only ever use the borrow function. So because it doesn't multiply my position deltas. So right here, if I've got a $60,000 LP and I'm generating 120% fee APR, then how much do I actually have at risk here? What is my value at risk in this position? Well, it's the difference between my pooled assets and the amount that I have to repay. So let's call it $26,000. So if I'm doing 120% fee APR on 60K, but I've actually got $26,000 at risk, then I'm actually doing on my owned equity in the position something closer to 300% fee APR, which means that if I take both of these positions in aggregate, I might have something like, okay, so 50 and 28. So, that's like 20, 21 and a half. So if I've got 26 here and 21 and a half here, then I've got like 47K value at risk between these two LPs. But I'm doing close to 1% per day on my owned equity in these positions. And I'm hedged. So if I click expand there, and then I take a look and see, okay, well, how many ETH deltas do I have in this LP right now? Well, if I just take a look at current assets, I'm plus 7.9 in this base LP. If I take a look here at the mainnet LP and I scroll down, I'm plus 6.57. So I'm something like plus 15 across these two LPs. But remember, I'm hedged here because I'm minus 47 on the borrow side on Aave. So if I'm plus 15 with these LPs smack dab in the middle of their range, but I'm minus 47 here on the debt side on Aave, what happens if price moves to the bottom of my ranges here? Well, both of these LPs would be almost, if they're at the bottom of the range, they'd be almost fully in ETH. If they're out
Yeah.
of range to the downside, they'd be fully in ETH, which means that my ETH deltas here would increase, but I'm overhedged here on Aave. So I don't really have to worry all that much, except to make sure that my loan health remains high enough to avoid liquidation. I don't really have to worry about the moves, each day up and down. All I do is I keep these things in range. Now, over here on
So,
Aave, remember my net, Mike, is plus 27. So if ETH rips higher, great, I'm long. Or if ETH pushes lower, that's okay too, because I'm hedged. So this is how I live my life.
you know what? I might need to like offline. I might have to have a talk with you. I want to build something out, especially when if I get to a point that I can start taking some profits. I really want to start, being a little more diverse in how I'm using DeFi. I always just kind of feel like I'm always scratching the surface of what I could be doing, and I want to kind of start learning some of these the deltas and hedging and things like that. Because really, for the most part, all I've really been doing is using LPs, just very straightforward, lending. Haven't done a whole lot of borrowing. I haven't tried looping yet. Really been holding off and waiting until I got start taking profits. Just right now I'm wanting to keep exposure to the assets that I have, in case the market starts ripping. So I really want to start learning about some ways, especially if we have a couple of weeks left, where you think that we're not going to be, really moving to the upside too strongly. I would love to figure out some ways that I could further stack my bags, but let's
Yeah,
see what.
look, I don't know anything about direction. It's impossible to predict anything. Instead of trying to predict direction, I just consume as much content as I possibly can from people who I think are valuable to listen to. Ben Cowan is one. I really like Arthur Hayes. He's another one. He wrote an excellent article the other day entitled, I think, 4-7 about how Secretary of the Treasury Scott Bessent and President Trump together could effectively usurp the Fed and force yields and force the curve lower and steepen the curve. Really great article that he wrote. And then Ben Cowan has been, prescient when it comes to, Bitcoin dominance and ETH BTC the entire cycle. So, I go with the guys who have been right, and Ben Cowan has been spot on. And so, if he's saying he thinks that Bitcoin dominance is going to push higher throughout the rest of this month and into October, well, hey, that's a data point. And, I let that in. I think that that's a good piece of information there to be aware of. Now, it doesn't mean that that's what happens. No one knows anything.
Yeah,
It's
nobody has a
not,
crystal ball,
no
but
one has a crystal ball, but
something that people
yeah.
need to understand out there is ourselves included. Nobody has a crystal ball, but you can use data to make educated guesses, and that's really all it is it's an educated guess based off of charts, historical patterns.
Dude,
you know
look at this guy, Sack Nasty. Who is
yeah,
Sack Nasty,
he's
bro?
Sack Nasty's my boy, man. He's always in all the chats and the shows. Yeah, he
Oh
has
man, that's
some
funny.
interesting comments that he puts out there.
He's got diamond balls. That's great.
Yes, yes, his balls are diamond. But yeah, so I mean, for the most part, everybody's just trying to make their best guess. So you have to understand that. You can't hold people just because they have a platform on the internet or on social media to some oracle level that they can call 100% of the time. If they can get it 70 or 80% right, that's pretty damn good. If you're trading and 70-80% of the time, you're making profit, that's a good thing. Nobody wins all the time, and the people that I usually listen to are the people that are transparent about not only their wins but their losses. So that's my 2 cents. But David,
That's
I
right.
I very much appreciate you, brother. I mean,
Thank you,
always a
Mike.
pleasure. It's
Yeah,
always a pleasure listening to you, and the information that you put out. It's yeah, I can't say it enough. But if people out there haven't, if you're interested in learning DeFi, past my little free DeFi course on our YouTube channel, just the very bare bones basics. I highly suggest that you follow the links in here. Actually, I'll just bring it up real quick before we end this.
Hey, Mike, can you share in the school DeFi U community? Can you hop in there and take a look at the investor mindset course? Because it's almost done. I've got like 2 lessons left, but it is really, really good.
Yeah,
and
one
it's
second.
created by AI here. I've used a handful of different AI tools to build that, and I went through all of the videos on there in the investor mindset course last night, and dude, just going through the videos helped me to level up the way that I
So,
think
so real
about this
quick,
stuff.
before we talk about it too much, I'll take us there. But
Mhm.
real quick, on our YouTube channel, DeFi Crypto and Airdrops, if you just click more, it has all the links. And so what David's talking about is come down here to David's DeFi University, click on that, and that will bring you straight to here. Oh, sorry, that will bring you straight to here. And
There.
where were you wanting them to go?
Yeah, so it's in the classroom. So I just
All
kind of want to tease the mindset course. And then it's the very first one there, the DeFi and Crypto Investor Mindset course. So if you click on that, Mike, and then just click on like in module 1, just like lesson 1, and just take a look at lesson 1 and scroll through this stuff just real quick so everyone can see it. So every single one of these lessons in this course, they build on each other. And this investor mindset course is based on 11 books. And the insights from all those 11 books together will, level up your trading game. And this is generated by AI, but I've gone through and uh, basically edited all of this. And so every single one of the lessons has a video overview and walkthrough and a podcast associated with it that you can listen to if you want to. So yeah, this is the type of stuff that I do for myself when I want to level up my own game. It's just a blessing that I'm able to share it with people. So yeah, man, I really enjoy this stuff.
Well, and the other great thing is that just, I mean, one, I mean, you take a very personal interest in everybody that's a member, and with the the live calls and just being available to give advice and things like that, which is very different than a lot of the courses that I've seen out there. But so yeah, I mean, again, just here on our YouTube channel, David's DeFi University. And then also I want to point out real quick, the he has an actual website as well. And it's defiuniversity.xyz, and has a lot of really good articles. And this is all updated in real time. Using an AI, and it has a lot of really good articles that you can read. Of course, and then there's the tools up top, and you can come in here and you have
Mike,
like
I'm still working. I'm sorry for cutting you off, man. I'm still working on, building out the tools section.
Mhm.
But what I've completed on the website is the blog, which I'm going to be updating today. That's the homepage that you were just sharing, those
Yeah.
articles. The private coaching, that's all ready to go.
Mhm.
University is just basically like a sales page for the school community. The
Yeah, yeah.
tools section, I'm still working on. And then you see where it says free DeFi course? Click on that, man, because that free DeFi course up there, this is actually really, really good. So again, this is 100% created by AI. I, of course, guided the process. I use Cursor and Claude Code to build all of this stuff. But if you want to click on any of these lessons here, Mike, these are actually really, really good. This is not AI slop. This stuff is valuable. So yeah.
Yeah, no, like I said, I mean, it's just there's a lot of value here, and a lot of it's free, and even his paid course is only like $97 a month. So and again, you get access to live calls, you get access to what some people out there charge $5,000 or more for. So just a ton of value. But anyway, just wanted to make sure that we let the community know that this stuff was out here.
100%, man. And the live calls are every single day, Monday through Friday, for an hour every day. I'm live in the school community with 25 guys and gals. And, I'm just about every single call, we've got between 20 and 25 people on the live calls. And,
Nice.
these are all DeFi and crypto investors who have built a skill set over the course of the last 6, 12, 18, some of them 24 months, working directly with me. So, they're all knowledgeable. And what we do is we talk DeFi and different aspects of DeFi every single day.
Absolutely. And Stan, to answer your question, honestly, I mean, you really don't need to buy a single course. I mean, a good portion of it is free, and the $97 a month is you get access to, again, the mentorship, the community, people like yourself that are, either just starting or intermediate or advanced. So, it's all about community, and finding mentors. So that's what I would suggest is just get in there, go through the free stuff. If you see the value, then and you've learned all you can from the free content, then pump it up to the paid version and get in there with the community and find somebody that you click with that has a similar risk profile, similar financial goals, things like that you can align with, and that is further along in their process, basically achieving what you want to achieve, and have them mentor you to get you to the next level. That would be my suggestion on it. But one thing
And,
I
and
will say is please use our link to join, because it helps.
that's
It
right.
helps us. It
That's
doesn't
right.
cost you any more, but it gives us a little something so that we can have something to help grow the channel. Because like all of you out there know, we don't monetize any of our channel with like super chats or YouTube or any of that. So any little bit that we can get to help grow the channel and spread the good word, and create a stronger community of integrity, I definitely want to do that. And because I've kind of reached the point to where I'm willing to come out of pocket to do all this work for free. So it's there's only so much that I'm willing to come out of pocket for. So anyway.
Yeah, man. So last thought, final thought here. If you decide to join DeFi University, um, I would say that you will get value out of it if you show up. That's all you've got to do. You've got to. I can't want it more than you. You've got to show up and put in the time on your own. I'm on these live calls with DeFi U members every day. Every single day, you've got an opportunity, if you join, to show up and ask questions, not just of me, but of everyone else in the group. So, hey, look, if you see what I do for a living and you want that for yourself, you want that freedom, you can have it, man. Anyone can do this stuff. It's just
Mhm.
about building the skill set and putting in the time, and you got to show up. You got to put in
Yep,
the work.
absolutely. Well, again, I appreciate you, David. I appreciate everybody in the chat. Couple of hundred people that are out there watching live. Pump.fun, here on YouTube and X. Appreciate you all. Stan, Louise, Sack Nasty. Who else we got here? Yeah, I
That's
know.
such a
Sack
great username, man.
C90, Ellie, Peter, Chili Rainbow, Brian Wild, um Silver Kid. Looks like we had Peter in here for a while. Eddie. Everybody out there, just appreciate the support, appreciate everything you all do. Please like, share the stream, follow us, and until next time, join us on Friday when me and David will be on again together. But until next time, Veteran Crypto out.
Peace.